Hey guys, today we're going to go over the one-time moving expense estimator. It's a calculator that helps you understand exactly what's expected of you financially to secure a property. We're going to go through it as quick as we can. It might take a little while, but first, disclaimer. We are not anything but real estate agents. We are not your lender, your professional on tax, or anything like that. So please do check with them. They are the professionals, not us. This is just for general guidance and awareness so that you know the questions to ask and make sure all the blanks have been filled in, okay? Another thing that's really important for this calculator specifically is the deposit is not included in here anywhere. We did that deliberately because there can be some confusion as toward how it's accounted for. Some people double count it, some people undo the count and not really sure if deposit is the same as down payment. We'll get through this, okay? So to start off, your deposit is due. Think of it as right when you put the offer in. You need to make sure that your financial institution has the ability to cut you a bank draft the exact same day, because that way you're not going to be in a tough situation, and that means brick and mortar where you live, because I've even seen it where people have a brick and mortar bank but it's across the country. And that could put you in breach of contract if you don't get the deposit in quick enough. Now, mortgage application fee and appraisal fee, those will vary. A lot of lenders tend to absorb those, and a lot of other that may try to charge can actually absorb them if you ask. So please don't be afraid to ask. It's pretty commonplace, and you don't want to be spending just because you're choosing to use that mortgage rep instead of somebody else where you could have saved it. In respect to a home inspection, those can really vary. It starts usually at about 500, goes up from there, depending on area as well as the overall size of the home, if there's outbuildings, that sort of thing. One additional thing that you'll want to be aware of if there's a wood burning appliance is you'll need a wet certified inspection to make sure that it is safe, and that's for your insurance. In that regard, if you're going to need it anyway, it might be a wise situation to get a home inspector that is wet certified to perform that. At the same time, usually costs you less. Now, if you're buying a condo, there's a status requisition. That's done a lot of times by the sellers, but not in every market. So make sure that you account for that if it's going to be on your plate. The next thing is if your lawyer is going to do a status review, which that's highly advisable always, you want to make sure that the way that they get paid is really isolated up front, because some lawyers will include it in their fee, include a couple in their fee, include none in their fee, and the timing of how you pay is dependent on their process. You may actually have to pay for each status review and then they credit one off of your final bill if that's the case. Again, check with your lawyer, make sure that you know exactly what to expect there. Now, that's before you get the property specifically. Once it's firm, all your conditions are out, utility connection charges. They may charge you account setup fees. It's unfortunate, lump them all in there. You get your security deposit, however, that's if you haven't used that utility before. They may require a security deposit. Usually they take it, hold it, and at a year, they say, good job, you've paid your bills. We're going to put that as a credit on your next bill, okay? Sometimes you can get around the need for a deposit like that with another utility supplier vouching for you, basically a reference of the same sort of thing. So check with them if you want to try to avoid that. Homeowner insurance premium, 1201 the day of closing. You need to make sure that you have your insurance set up. Your lawyer will have to certify to the lender before the funds get advanced for closing that you have insurance set up. You'll get something called a policy binder from the insurance company, basically saying, yes, we're bound to insure this property. That needs to go to your lawyer, so your lawyer can say to the mortgage company, yes. Okay, now just prior to closing, this is when the next big amount comes out. Your deposit could be a big amount. Some areas it's not. Now, in that respect, this is the big money. It's the most of it. And your deposit, whatever that was, is going to start off your down payment. So even if you put 5% as a deposit, then that starts off paying off your deposit or your down payment. Sorry about that. It starts off paying off your down payment. If your down payment was just 5%, great. You just have all the closing expenses left. If your down payment is 20%, the first 5 that was your deposit accounts for this. That's why we don't put it in here, so it doesn't look like it's double counted. Even if we did some math behind the scenes, some people would have questions. This clears up exactly what is coming out of your account just. Okay? Legal fees and disbursements. Disbursements are dollar for dollar payback for anything that the lawyer has had to request. So think of title searches, any requisitions that they need to verify different things. Those are dollar for dollar payback, and then their fee, whatever their fee that they charge is. Municipal and provincial land transfer tax. Unfortunately, everybody gets to pay the provincial, but for the lucky few, those who are buying in Toronto, most specifically, some other municipalities may institute it. They changed the laws allowing them to, but a municipal in Toronto is equal pretty much to what the provincial is. So you pay that tax 2 times. There are rebates for first time buyers. Check if any of those apply to you in whole or in part, and find out what those amounts are from your lawyer. They can rough estimate it for you at the onset of you looking. So if you're checking around, finding out which lawyer is good for you, ask them that question based on your situation. PST on CMHC fee. CMHC is Canada Mortgage and Housing Corporation, which is a mortgage insurer. Okay. They're basically an insurance policy for the lender that if you stop paying, they'll help the lender get rid of that property. Now, in that respect, what happens is they charge you a premium. If you have under 20% down, it needs to be insured. And it's CMHC that we say, but there are different mortgage insurance companies. It really just depends. That one's pretty well known. That's why we throw it out there for terminology's sake. That said, the fee can go on your mortgage and you can keep paying that forever, but the PST cannot. Tax can't go into a mortgage. So in that regard, you need to make sure that you know that PST amount because it's not necessarily small. Next thing would be title insurance. As far as title insurance goes, that can vary depending on purchase price, but also based on what's included. Some have mortgage fraud or identity theft protection. So you want to make sure you know what you're getting and what the benefits of others are, because some lawyers just go with the one that they're used to, and that might not be the best product for you. So see what they give you, see what the reason you're being recommended that one is, and see what's right for you first. Now, prepaid property taxes and prepaid condo maintenance fees, those are pretty similar. They're just saying because those figures, those amounts, if the seller's already paid them, would be really hard accounting to back out of those two notoriously slow institutions. It's easier for you to just pay the seller and assume their credit with those people. But you don't know about those things until closer to closing. Yes, you could do some asking to see if the seller's paid in advance on anything, but it's not always precise. Your lawyer's going to have those numbers rolled in as far as accounting, settling everything with the day of closing and beyond being your responsibility. They will give that to you in their one giant lump sum saying, bring us this draft or certified check, and we'll close everything up. That's usually the week prior to closing. Some lawyers vary. Now, just after closing, there's different expenses. Your moving, your storage, your furnishings, window coverings, renovations, painting, miscellaneous. If you're having people help you move and set up, maybe you want to give them dinner while they're there, and that's a cost. Budget it all. Why not? Now, those things are pretty straightforward, but this property tax top up, what the heck is that? Oh, well, for in your first month, there's 3 different scenarios that usually play out. In your first few months or 6 months or a year, they have you pay additional property tax because your property tax account is going to be deficient. Whenever that bill shows up and the property tax department says, give us some money, it's not going to be there yet. It's not going to be built up. So your lender may say, give us this money piece by piece. Or secondly, they may say, give us a big lump sum. Or third, they may just pay it quietly and let you pay them interest when they announce, hey, we paid that quietly, give us some interest. So check to see what your lender does specifically because there's no standard. And that only comes into play if you're paying your property taxes in with your mortgage. Some lenders require that you do and others don't offer you the option. And some offer you the option. So know your lending If you have any questions on anything here, talk to the adequate professional. If you have more direction needed on who to ask these things about, reach out to us. We have a ton of resources to make sure that you're getting exactly what you think you are when you're dealing with a professional. So reach out anywhere. If you found this video, you can find us and connect. Talk to you then.